We're not going to have a housing bubble, not like 2007, and we're not going to have one, period. There's been a lot of movement in the mortgage industry and in the housing industry, period. We're going to return to a little bit of normalcy here. Hey, it's Larry Gonzales over here with your Mortgage Market Minute. One of the things that I noticed, I'm almost tempted to get off of social media, at least Facebook. I looked at a housing article off of Facebook last week, and now the only thing that I get is Housing Wire, Facebook, not ads, but articles on how the market is crashing and the bubble, the bubble's gonna burst literally every single day. Why are they just sending me negative news? Is it all negative? Sometimes the media will spin things because that's what they want you to believe, because they take a headline without reading into the details. All right, or doing an examination into, all right, well, what were the numbers before? And what was the inventory like back in 2007? It is not, we're not gonna have a housing bubble, not like 2007, and we're not gonna have one, period, all right? There's been a lot of movement in the mortgage industry and in the housing industry, period, over the last 2 years, all right? We're gonna return to a little bit of normalcy here, all right? And that's kind of what I expect to see going forward. But let's break some of this down. I start with the big three, right? Prices are still going up. Not crazy yet, but still going up. Inventory's going up. And then rates. Man, I tell you what. Actually, I'm glad that we had a new week. Last week, interest rates hit the highest that we have seen in 13 years. All right, to give you a little bit of an idea of the change in interest rates. Last week, interest rates got up to 5.37% on conventional. The year before that was over 2% lower for interest rates. That's a huge difference. And here's what's crazy. We are still having historically high rates of appreciation. But at some point, that has to end, right? I think it will, but not quite like what the media is starting to portray. So let's break some of this down. All right, let's talk about what is causing rates to go, what is causing all this churn, all right? The quick answer is inflation. Inflation is high, all right? We're looking at 8.5% last measured. All right, we'll get the next month's measurements on inflation. I expect they'll be even higher. All right, we also have China. Shanghai, they're shut down. All right, the ports are clogged. There is no harbor. You could probably walk across the ships in the harbor, all right, without a ladder. There's so many ships out there. All right, and there's talk of Beijing being shut down because of COVID. China is having a huge impact on our inflation. Not something that we see now, all right, but we will see it in the reports that come out in the next couple months. Russia-Ukraine, that's a war that's not going to end anytime soon, all right? We are pouring more and more money into helping Ukraine defend themselves against Russia. Where does that money come from? It comes from our economy. You have corporate earnings. This is the big earnings week, and everyone's reporting how well they did in the first quarter. Well, things didn't go quite as well as they expected in the first quarter. All right, and you see all this market churn in the stock market. Been a lot of bloodshed over the last couple weeks in the stock market. All right, I know some of that blood is mine. Those are the things that we're seeing. Does that mean we're going to have a housing bubble? Does that mean we're going into a recession? Well, I think we are going to go in a recession. The recession may not happen for a while, but I think that is going to happen. But we're not in a housing bubble. In 2007, at the peak of the housing market, there was a supply of 3.8 million homes. There's today a supply of about 950,000 homes. Freddie Mac said that we need 3.8 million homes to meet the demand. We haven't produced more than 1 million homes in a year in over a decade. Not gonna happen. Supply and demand. As long as there is more demand than supply, we will not have a housing bubble. All right, the bubble is not going to burst. Prices will slow down. The rate of appreciation will slow down. Absolutely, it's gonna, because there aren't as many people looking at homes, because some people are there quitting, and we'll get into that here in a minute. But that's the backdrop into some of the reports that came out this week, and there were a lot of housing reports. And one of my favorites that came out was the Case-Shiller Home Price Index, and this is the gold standard for home price appreciation across the nation. This report is for February, so they're a couple months behind. But home price appreciation year over year, 19.8%, so staying pretty close to in line with what we've had for the last year. Month over month, up 1.7% in appreciation. Places like ours, the highest month over month rate of appreciation, San Diego, 4.5% appreciation in February. I'd say that's probably where we were at in Oahu. All right, Seattle, 4.4%, San Francisco, 3.7%. Month over month appreciation. There were years when we would be happy with 4.5% appreciation. Bro, they did it in 1 month. That is not sustainable. Can you imagine 48% appreciation in a year for your home? I'll sign up for that. Not really realistic though. Phoenix, year over year, annual appreciation, 32%. Tampa and Miami were the next two at 32 and 29% respectively. That's humongous appreciation. Again, not sustainable. But that February report, let's also remember that February report does not capture the large increase in interest rates that we've had over the last 3 or 4 months. Interest rates started going up in January, but they didn't really take off until really March timeframe. So it'll be interesting to see what next month's Case-Shiller Home Price Index looks like. Will it be that high? I don't think so. I think there will be a return to normalcy, and we will see at the end of the year, we'll probably be seeing, maybe high single digits. Pending home sales, down 1.2% in March, down 8.2% year over year. Why is that? It's because of rates. Inventory and home prices going up is lack of inventory and home prices going up. That's also playing in it, but I think the rates really, that's I think the biggest reason why pending home sales are down. If the rates weren't so high, people could afford those higher prices. So last week I said interest rates, boom, highest in 13 years. Purchase applications were down 7.6% last week because of that, down 16.6% year over year. People are, not only do we have people who are pre-approved and are dropping out of the race, you have people who aren't even getting it. They're looking at that racetrack and I say, you know what, I'm gonna go back into my rental and I'll just go into base housing. And so what does all of this mean? That's a lot of stuff going on. That's a lot of reports. I love it. Every morning I get up and I read these, and I read various news articles. I try and stay off social media because it just pisses me off these days. But what does this mean for home buyers? For home buyers, prices they're gonna still go up, guys. But I am seeing offers being accepted at asking. I am. And here's the other thing. PCS season's coming up. People are getting their houses ready. I know that because I talk to them every single day. And they want to sell. And they are going to sell. So if rates continue to rise, they're going to be under orders. They're going to have to lead. They're not going to have time to wait for that perfect offer to come in. They're going to take good enough. And good enough is still going to net them a really good check off the money that they made through the equity that they gained in home ownership. So don't worry about that interest rate, all right? Because rates will come down. My guess is they're probably going to come down once inflation starts coming down. And I've seen people talk about October time frame. I don't know if they're going to come down that soon. I would love for that to happen. But I'm thinking probably closer to Christmas time, we'll start seeing those rates come down. I just don't think Everyone wants everything to happen very quickly. I don't think inflation is going to come down that quickly. Fed's going to raise, 50 to 75 basis points, the Fed funds rate. I don't think that's going to be enough. They're going to have to do it a couple times. And, say they do it in May and then they do it again in July. We won't see those effects and reports until September, October timeframe. All right, at that point, probably we might see, but realistically, November, December is when we'll start seeing rates come back down. Hey, in that case, you refinance. All right, it's not a bad thing. That's a good thing. But rates will come back down. The key is you got to get in the house, and you're going to have more opportunity coming up, I'd say, in the next 2 to 3 months. I want to do that for you too. All right, y'all have a great weekend. Don't give up. Have fun. Aloha.